day, everyone. Today we are going to have a great detailed look into the GTA market performance. If you're like me, that likes the numbers and likes to know how the market is, and you've always been asking me questions and watching my videos or presentations, today I wanted to get you access to the source of all of this information, Mr. Chris Slightham, the CEO and President of Royal Lepage Signature. Chris, thank you so much for accepting my invitation. I know that you have a very busy schedule with everything that's going on in our renovation in the office and as well as everything else that you're dealing with. And I really appreciate the fact that you are here with us today. I just wanted to ask you to start the thing with, can you tell us a little bit about yourself and how did you get into this business? And then I might have more questions for you.
Yeah, for sure. Well, thanks very much for having me. It's always fun to talk about the real estate market, especially the one in Toronto and the GTA. It's a big place that's growing, and we're excited to be a part of it. Yeah, my family's been in the business for 57 years, and so I come by it kind of, I guess, by naturally, and so I've enjoyed it. Kind of followed my dad to the office when I was little, and then kind of took it from there. And now we've been doing it a long time, and really enjoyed the opportunity that real estate has brought us in this amazing city we live in, and we've had a good run. It's been a lot of fun.
Yes, like that. You are doing an amazing job.
Thank you.
And I really appreciate that. I'm not saying it just on behalf of myself. Everyone else who I know from the office, they are really enjoying being with you. And yeah, let's just, again, appreciate your presence here. And I just jump into the conversation about the real estate market. The first quarter of this year is already over. Numbers are out. And what do you think the market, how did you think the market performed in the first quarter?
Well, it was an exciting ride the first quarter. As you know, out there working with your clients, it's been a challenge because there's been so little inventory. There's been very little choice of homes, resale homes for clients, people that are looking to get in the market, first-time buyers, move-up buyers, downsizers. It's been difficult all the way around. And that's put a lot of pressure on prices.
Right.
So supply and demand, we all learned it in Economics 101, if we can still remember back from those school days, that when you have supply and demand, limited supply and high demand, it tends to push prices up. And that's what happened. So we actually set a new price record in the first quarter of this year for the GTA, which is pretty exciting. So the average price in the GTA now is, for the first quarter, is $1,299,000. So almost $1.3 million.
Right.
The average sale price for the first quarter, and that's up 23% over the same time last year.
First quarter of last year.
Yeah.
Wow.
That's a big growth, and that's not normal, because if you look at we always study the market over the long term, and because that's the way we look at real estate, right? We really and this is what we remind people, is that you really want to look at real estate over the long term, even though it's exciting to see in the moment what things are going on, but really it's over the long term. And so when you look at the chart that we've put together of the average sale price and how it's kind of bounced around over the last 40 years, you'll see that it's been a pretty steady growth, but it really goes in sort of like a 7% annually average. Right. So when you see a 23% price jump, that's a big jump. Just over 3 times faster than normal. So that was an exciting first quarter this year.
How do you think that would last? I mean, is there the sustainability in this kind of price increase?
Yeah, it's a great question, Ed, and I think that's what everybody asks. My house price still going to go up, or is it going to come down? And it's very difficult to say. There's a lot of factors that drive home values. However, I think that when things go up quickly, they either then tend to plateau or pull back a little bit. But over time, real estate in the GTA goes up.
Correct.
But in the short term, you might see a little bit of pullback, because now, of course, we've got interest rates that are starting to move. They've already moved one quarter in March, and now they're about to move again. We won't know for a couple more days, but they're about to move again, and so that will likely, cause people to think about how much they're spending on their real estate.
Right. And do you have you heard about like I heard that it was going to be this time it's going to be half a point.
That's what they're talking about. Yeah. So I think that's what everybody's waiting. I think for sure we're getting a quarter. The question is, are we actually going to get a half point?
A half, and that would be another impact on the purchasing power.
Well, that's it. Exactly. Yeah. It impacts people's budgets and how much they can afford to pay for a home. And so when that impacts the buyer's ability to budget for the house, then they can only pay a certain amount when they can only afford a certain amount. Correct. And so as their borrowing costs rise, that purchasing power pulls back a bit. Now, we live in an amazing place. We've had incredibly low inventory, and that really isn't changing. And our federal government's mandate is to welcome over 400,000 people a year to Canada.
Right.
And so and I know they're on track to do that again this year. And so when you bring all these new folks in that of course need somewhere to live, that always helps hold prices. And so I think even though interest rates are rising, which isn't always a bad thing, I think we have to remember that too. It usually means that the economy is doing well, so they can raise rates again. Because we just received the jobs numbers, the best jobs numbers in I don't know how long, just came out last week as well. So our employment levels are high. Our cities, our region is growing with population. These are all very positive things for real estate, which helps hold prices up.
Right. Yeah, that's so true. Like when the demand is there, and when you talked about the 400,000 people coming to Canada, we know from experience again that majority of them are normally coming to Toronto. Canada is mostly Toronto.
Yeah. Well, the majority of the population is in Ontario.
Yeah.
And likewise, where the jobs and the opportunities are in Canada. So it's an attractive place to live.
So it could be just a matter of the purchasing power. Like if somebody was qualified to buy a $2 million property, now they can buy a $1.8 million property. It's not they're not going to go away. They're going to be here. The facts that they face the reality that this is my purchasing power. I need a home, and okay, let's now go and look at a 1.7 or 1.6 million dollar. It's not going to be, let's just give in and not buy a home.
Correct.
Right? So I think that the demand is there. It's just a matter of a slowdown. Is it like a short period of time for a plateau or slowdown, and then again, because we haven't addressed the demand, we just have addressed.
That's exactly right.
Right.
Yeah, that's exactly right. We haven't addressed the fact that we don't have enough houses.
Right.
And we can't build them fast enough. And the fact that, as you just said, people are coming to Canada, so they need houses. So to your point, people need homes. It's not like we don't need homes anymore. We need them.
Yes.
It's just what can we afford to pay for them.
Right.
Yeah.
And face the reality.
Yes.
Perfect.
Yeah, which is never easy.
Yeah. It takes a while.
It does. Sometimes, yeah. But we all adjust.
Yeah.
And this isn't anything new.
Yeah.
Right. The interesting thing is when you look at that average price chart, you see it doesn't go up in a straight line, right? It bounces around, right? And so it's happened before, it'll happen again, and it's just a normal, ebb and flow of how prices increase over time.
Right. Yeah.
So you see on the chart around the late 80s and early 90s, there's a massive spike in prices, and that was the last time that we had a real big spike in home values, and that were way off of the normal pace. But you'll see how big of a spike that the chart shows that really in the 80s, which really caused things to get really out of whack.
Right.
So unfortunately, when you have that big of an increase, it takes a little bit of time generally to reset that. And nowadays, although we're a little ahead of schedule, we'll call it on our pricing, we're not, year after year after year being ahead of schedule, which means that it's not as far off of the norm as things got back in the early 80s.
Right.
So it doesn't require it generally to to correct as hard as it unfortunately had to back in those days. Because the federal banks, nobody wants huge volatility in home values, right?
So, at least not in Canada.
No, definitely not. And so the federal banks, monitor interest rate levels and borrowing power of individuals, and what they're trying to do is trying to avoid those huge swings.
Right.
And that's what they're in the process of now, is try to figure out, we're going to raise rates a little bit so things don't get too carried away for too long, so we don't end up in a really, really bad spot.
Exactly.
It'll be a little bit of short-term pain so that we're not in a really bad spot for a long time.
Yeah, I think we are lucky that we live in this country, that these things are being monitored, and like some short-term decreases or plateau of the market might impact some people who they had their hopes up and they wanted to sell for a very high price at the short term. But generally speaking, in the long term, it will help all of us. I mean, everyone who lives in this wonderful country, and it's really great that they're watching this. It's important. Now, let me see what other notes I have here. The increase in the
foreign buyer tax?
Yeah, foreign buyer tax, 5% extra, and banning them from purchasing in 2 years. What do you think? I have my own opinion on it, but what do you think? What do you think that would do? How does that impact the market and the prices and the demand?
It's a great question, and I think we'll have to see how it plays out. However, from the stats that have been released, foreign buyers only account for roughly 2% of the market. So I don't know if that's really going to make as much of a difference as I don't know, maybe I don't know who makes the decisions, but whoever makes the decisions feel that was the right thing to do. I don't feel that it's going to drive too much of a change in the market. So I don't see it making a big effect.
Yeah, like I'm completely with you on that.
Yeah.
Like as soon as I heard it, I was just something came to my mind. In the book, what's it called? Good to Great.
Yes.
He's talking about the level 5 leaders, and they say when the success is happening, the level 5 leaders are looking at the window. When the failure happens, level 5 leader looks at the mirror.
Yes.
So if you're looking at outside the window, and if the prices are going up and looking for some external forces that they're facing this, making this happen, and we're just gonna increase the tax on the foreigners. Foreigners are doing this to us. I mean,
Doesn't make sense.
I'm on the road. I'm seeing clients. I have clients. In my entire 15 years of being in real estate, I only had one foreigner who approached me that they wanted to buy, and they didn't even buy.
Yeah.
Okay,
yeah. So it's a small component of the market.
Small component.
Yeah.
And making that a big deal, basically, I think it's more like a political approach to the thing, as opposed to a real solution for the matter. I'm happy that we're both on the same page. Okay, so now we talked about this. One thing that these days are very popular is like the pre-construction, purchasing in the pre-construction. And wanted to know what your idea is about that. What do you think it is as where do you think that the market in the pre-construction is going right now? As we know, like prices in pre-construction are typically these days are more than the resale. If you buy something in pre-construction, you should be ready for paying more than what it is right now in the market. Yes. So how do you think that sector of the market is performing?
Well, we know it's very busy. We do a lot of business in the pre-construction market because there's a lot of great projects that are coming. And when there's very little supply of resale, your only option is to have a new home, right? That's the future of housing, right? That's the future supply. So I think that's really something that why people are choosing pre-construction. Obviously, the other one is there's a staggered deposit program. So it allows you to spread your deposits out over a number of years, which I think is a fabulous model to allow you to get into home ownership. And I think that's why it's really, really popular and would continue to be. You know, some people think, well, there's all these cranes and it's, my goodness, we're a city, like how can we absorb it? Well, you can't start building a condo without sales.
Right.
So none of these buildings are being built speculatively. They're
Right.
all being built with sales in place. So they're already pre-sold.
Right.
And so that's the nice thing about our marketplace. There wouldn't be cranes in the sky without sales. So that provides more stability to the market, because prior to 1990, they actually used to build buildings without having sales in them.
Right.
Yet, and that's one of the reasons why the market got in a lot of trouble back then. But now they don't allow that. So that's one big positive. And then, of course, as we've talked about already, the fact that there's so many people moving to Canada and this region in particular, there's a massive need for housing. And so and it takes years to build these projects. It's not overnight. Right?
Build it and we have something tomorrow.
It takes roughly about 10 years to take from a piece of land to deliver a finished unit. By the time you do all the zoning and the changing and the sales and construction and all those sorts of things, it's 7 to 10 years. So it doesn't happen, overnight. So the cranes you see today, the vision for that building could have started 5, 6, 7, 10, 15 years ago, depending on how long it took to get that developed.
One of the ways that we're approaching to the evaluation or appraiser is just like the what is it called? It's called replacement value.
Yeah.
Right. So if we are looking at something that is $1,100 per square foot, and we are appraising it, one of the approaches is replacement, and these replacement values are real. Mm-hmm. It's like the price of the land has gone up, the price of the
materials, labor, everything.
And everything's gone up, so it is going to be really this is going to be the price.
Yeah.
So I would say people who are having the buying in resale, they are enjoying this with the market that it goes.
They are. And we have to remember, as much as we like to point the finger at the builders, I mean, they're not making more profit today than they used to. They're making actually less profit today.
Yeah.
It's just that the costs have gone up so much that that's why the prices are where they are. Mm-hmm. To your point, some of the resale condos we're selling today, you couldn't build them for what people are paying for them today.
Yeah.
So that future value, by the time you take delivery on a condo 5 years from now, a lot of time has passed.
While we are talking about pre-construction, majority, at least from what I know, people are more of the people who are purchasing in pre-construction are investors.
Yes.
And now that we talk about investing in pre-construction, I wanted to know your opinion on investing in real estate in general.
Sure.
What do you think the investment in real estate is?
Well, I'm a little biased because we're in the business
and
we're investors ourselves.
Yeah.
So it's served us very well, and I would highly recommend it. The way we look at it, though, is over time. Right. So I mentioned it earlier, and I just want to reiterate that point is, timing the market is difficult, but time in the market is what the answer is. And that's where we have to, that's how we always remind people to look at investing in real estate, is you really want to plan for a longer time horizon. Speculating in real estate, either buying something and selling it in a short period of time, that's different than investing in my mind. Speculating is it's almost like gambling, right? That prices are going to go up quickly. That to me is a short-term view of things. But investing is really buying something, have a tenant in it, and over time the mortgage gets paid down, the values go up, and it's a really, really great long-term story. In our market, as we showed in the charts, you can see over time, years over year, even though it doesn't go up in a straight line, it can have dips, but over time, it's generally going up, right? And so, if you imagine today and 10 years from now, if the 40-year average is around 7%, that means values double every 10 years. So let's say it goes up at 3.5%. Let's go half of that, right? It's up 50% in 10 years. So it's a pretty amazing result investing in real estate. And the longer you hold it, the better the result can be. So we're big proponents of investors, of investing in real estate, and highly recommend it. And it's just, we can speak to it personally because we've done it ourselves and been very lucky.
Yeah, that's great. We are going to have another session and get deep into the details of investing in real estate. What would you suggest? Is there anything that you wanted to share with my clients, my colleagues that are listening to this about real estate in general, or any advices you have for people?
Yeah, I think right now we're going to go into a time where things are changing. The market's pivoting a bit, and I always remind everybody that it's a natural thing for it to happen. So try not to worry too much about it. Really take that long view of real estate, of the marketplace, and it's hard to say if things are expensive today or they're not expensive. It's really, how is that going to reflect 5, 10, 15, 20 years from now? So in a time when we're going to see interest rates rise, which they naturally have to, they were, what I would say is abnormally low, right? So for a reason, like there was a purpose for them, but now we have to bring them back up. And it's going to take time for lots of things to adjust. Car values, lots of different things are going to be affected by interest rates. And that's natural. It's just normal. Don't panic about it.
Yeah.
Take the long view, study it, get great advice from you, Ed, for sure. And because that's the thing, is you have to dig into the details of the marketplace, of where the type of product you're buying. I always get, well, should I buy real estate today? Well, it depends.
Yeah.
Right? It depends on your situation. So you really have to think about your personal situation. Don't worry too much about the volatility of it. Just think long term. And if you do that, the market will treat you really well. And real estate will be really valuable for you and a great investment. And if it's a house, just how great is it to have your own home and raise a family or entertain friends or whatever you plan to do. It's a pretty exciting thing.
Exactly. And thank you so much, Chris. I really appreciate your time. It was a great session. And by the way, he told you to get great advice. You remember that?
Absolutely. Get great advice.
And so I'm going to go to him and get some advice from Chris then. Thank you, everyone, for watching. And
thanks, Ed.
Again,
appreciate you. Yeah.
Thanks.